Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the charts we go. Markets are trading slightly lower on the day. You got a little bit of an early afternoon sell-off after a gap down this morning, and we saw the markets rebound back up. And again, if you just take a look at the charts here, you can clearly see that we opened lower right on the 200 MA on the intraday SPY 10-minute chart. Remember, the SPY is the tracking ETF for the S&P 500. Initially, the markets did hold the 200. Once I saw that, I said, folks, and this is me talking to the intraday stock chat members here at InTheMoneyStocks.com. I said, folks, look for the markets to float up. As long as they stay above the 200 MA without confirmation below, look for a neutral to upside bias. And again, sure enough, following that, the markets floated all the way back to the positive side before seeing a little bit of a downdraft right back to that 200 MA again. And now we're floating back up. Right now on the day, folks, we are seeing the SPY trading lower by 27 cents, a very minor move down. S&P's down 3 points, Dow's down 26, NASDAQ is down 9.5. All right, let's go into a couple other key things. Number one, yesterday I gave perfect analysis on this market. Let's go over it so you guys understand and can do it for yourself. If we go back to yesterday, and this is yesterday's action, folks, we talked about how it was very important to watch where the market would close. Okay, and basically in yesterday's free video that you guys watched, I said, listen, if the market closes above the gap fill from Friday, which here's the gap fill from Friday right here, you have a bullish bias going into today. If the markets close between the gap fill and the previous day right here, essentially the big down day we had on Monday, if they close between this level and the flat line from Monday, you have a neutral bias for the day. Okay? And if you close obviously below or flat to below, you have a negative bias for today. So sure enough, where did we close yesterday? We closed just below gap fill. That's between gap fill and this flat line from Monday. And that tells us again that we have a neutral bias on the day. And exactly where is the market trading today? Basically flat on the day. So again, if you just read the charts correctly and use the PPT proprietary strategies we teach you here at InTheMoneyStocks.com, you basically can tell where the market's going every single day. You can tell where specific stocks are going every single day. I mean, it's all there for the taking, just a matter of are you going to learn it? And it's very simple to learn too. I mean, we've taught, at this point, hundreds, if not thousands of members how to make money for the rest of their lives in the market, competing and beating the institutions. Very, very simple. All right, guys, so that's what we have going on right now. The markets, again, are floating back up right around the flat line, down 22 cents on the SPY. That's essentially a flat day. Volume is very, very light today, 87.7 million, as we are around the 2:30 p.m. time frame. Now, tomorrow we have some key things. First of all, tomorrow's Thursday, and tomorrow morning we will have the not non-farm payrolls. We're going to have the jobless claims at 8:30. In addition, the ECB will release their new comments on interest rates and the economy. I think the ECB comments are going to be the big ones because obviously Europe's the reason why this market has been under pressure. Monday was the reason for the fall, European issues there. And even today, early in the day, we saw the DAX down about 1%, and that's keeping the markets under pressure and not allowing the U.S. markets to really rip higher. So Europe seems to be the problem child right now. And again, the question is with the ECB report tomorrow, does that change anything? Do we see a massive rally on our hands? Do we see a drop down? I do think tomorrow you do have a good size move in the markets. All right, one way or the other, you're making a move up or down. Today was a neutral bias after the close yesterday. Tomorrow, again, I do think you will have a major move. I'm going to watch to see where the markets close today to give us a sense on that. All right, but again, I am saying right now you should have a pretty decent move. My guess is Dow up or down 100 points tomorrow. We'll watch and see if that happens. Couple stocks in motion today. Amazon continues its sell-off. Had a nice bounce yesterday, but really coming right back in. This is a very bearish selling pressure on Amazon. For a market that is basically flat, to see Amazon down $5 and essentially negating the entire move up yesterday, that is not a good sign. Hasn't negated the entire move, but very, very close. This would be official gap fill down here. If you go to the daily chart, it continues to hammer on this 50. I got to be honest with you guys. I think it's going to break the 50 based on the price action I'm seeing. And my guess it's going to go down here. This will be first stop right here at around the 250 level. And if it's able to break 250, you're going to go right here, possibly touch the 200 moving average around the 240, 239 level. So again, I think right around the 239, you start to see some traction on Amazon, but I do think it's going to head there in the not too distant future. Let's take a look at Apple. Apple spiked up early in the day, intraday. You can see this major spike. There was a rumor that Apple was going to do a buyback, a stock buyback. The stock spiked up. Obviously, that rumor not necessarily correct since the stock has come back in. You're actually making a bearish pattern now on the intraday Apple, so that'll be interesting to watch into the afternoon session. Right now, Apple is right on the flat line, trading up 50 cents on the day. Couple side notes here. Every single day over the last probably month or two, the financials have led. All right, the financials have been the strong area in the markets. You can take a look at the JP Morgan chart today, or I will even look at the daily, but just look at this dramatic move really since the beginning of November. 1, 2, 3 months up non-stop on JP Morgan Chase. Today is finally the first day I'm seeing a crack in the strength of the financials. So I'm guessing that JPM short term is going to be a pullback candidate. It went right into a major resistance area right here, triple top going back to 2010, 2011. And again, based on that and based on the extension move, you probably have a short term small pullback that will take place on JPM. If you do see that take place on JPM, it's most likely going to mean the markets are going to stall here a little bit as well. We're still in the range that I gave out as resistance as many as a month ago, saying 150 to 152 on the SPY was your resistance range. And again, that's basically giving a 20-point range on the S&P 500. It equals 2 points on the SPY. All right, so that's kind of an interesting chart there. Goldman is down today, Bank of America weak. We're also seeing Chevron and Exxon continuing to be weak here. Google is flat on the day. BlackBerry flat on the day, which is actually a good showing on BlackBerry considering the big gains it's seen. And again, across the board, we can take a look at a couple other plays out there. DuPont trading down 25 cents. You can see it slowly coming off the 200. Great hit of the 200, just coming back to the 20. That'll be a little bit of support. Deere trading down nicely down on the day. One other stock under major pressure, and this is kind of an interesting one. Look at IBM. IBM's down $1.50 on the day. Now, the key here about IBM that I find so fascinating is that yesterday the markets had a big rally, right? Big rally in the markets. NASDAQ was up, Dow was up, you name it, they were all up. IBM was actually down yesterday. So that's kind of showing me something. And IBM's a biggest component in the Dow Jones Industrial Average as well. But today the markets are flat and IBM's down at $1.56. And you can see the chart. After the great earnings that they reported in the big pop, the stock has really just cascaded down, giving up more than half of the gains from earnings. From the high, if you take the gap right here, low, the gap fill, all the way to the high on earnings, the stock is down substantially from those highs. So, the question has to be asked, well, what does this mean? Is IBM, just like JPM, giving us a little bit of a heads up? Well, time will tell, obviously. I'm just going to read the charts day after day and isolate it out. When it tells me, that's the case, then I'll obviously take action. But, it's definitely an interesting situation here with the financials starting to stall out a little bit and then IBM's price action here being as weak as it is. All right. Let me see if there's anything else I want to mention. Let's just go back to the spiders. So again, folks, spiders, look at the spiders daily chart. I love this daily chart. This daily chart literally gets me excited every single day when I look at it because it's so awesome. But look at this. Pivot point right there. Pivot point right there. Where have you been trading? And this is how I actually arrived, amongst other reasons of calculations, at this being the area of resistance, which has worked out perfectly. Literally 1, 2, 3, 4, 5, 6, 7 days in a row we've hammered on this blue trend line, and the market can't get through it. Now, at some point, if it keeps hammering without a pullback, it will get through, but the question is, does it start to pull back first before it gets that momentum break up and break through? So, again, we're watching that very carefully, but that level has been the golden level that anyone could ask for. It's the best level in the world. And again, while it's so amazing, because even this morning on CNBC, folks, there was no one bearish. There's no one bearish out there. There's no one bearish. I mean, they even commented how everyone was bullish on CNBC. And the one thing I would just mention for those of you watching this video, the retail investors dumping 18 billion per week into the market, which is huge. That's the biggest number since 2002. The media is pumping like crazy on CNBC, yet insiders are selling at a 9-to-1 clip. That's right, folks. Insiders are dumping. For every one share they're buying, they're selling nine. Think about what that means. That means for every 1,000 shares bought, we're seeing 9,000 sold on the market by insiders. Got to be a little bit of a heads up there. I definitely wouldn't be wanting to enter the market up in this range when I see that type of data out there. All right, folks, I'm going to get going here. Back to the charts I go. Have a great afternoon. Come join us here at inthemoneystocks.com. Take the 7-day free trial. The research center is where you want to be. The research center is for swing traders and investors. We'll divulge our proprietary techniques, give you swing trade alerts and calls, and make sure that you're on the right side of every major market move. Take care, folks.